everybody, back in black as usual. Thought I would push out another video to give you a little bit of update on what's going on in the market. Obviously we saw, I don't know if you guys watched Jerome Powell's information that that I sent out that link today. I'll give you the short and easy version. Basically we knew what the rates were going to, or we knew there was going to be a hike today of 25 basis points. That's been priced into the pricing for some time now. Currently, we are sitting at about 19 basis points in the positive. There's a lot of different levels of resistance, but at least we're moving in the right direction after a big pickup and after a big meeting today to see that we're still moving in the positive direction. That's a good sign. Really what it comes down to is the commentary of what Jerome Powell was going to say in the meeting. I watched it. It was, I'd like to say much ado about nothing, but that's a good sign. There were a lot of questions asked about when are they going to when are they going to hike rates again. He really just said he seems like things are moving in the right direction, and so they're going to take it month by month. They're not going to set any tone as to what they need to do. There was also some talk of, inflation is moving in the right direction towards 2%. And questions were, are you going to wait till it gets to 2%, or are we decelerating fast enough or deflating fast enough in order to put a pause on things? And he wouldn't necessarily say that they're putting a pause on things, but for Jerome Powell, that's a sign that things are going the way that they expected. So that's really good news. Hopefully we continue to see rates go down. He did say that he wouldn't see any rate cuts until potentially next year. That doesn't mean that rates won't get lower. It just means that if the Fed doesn't cut rates and doesn't hike rates, we'll probably start to see a continued decline in rates until they get aggressive, which you said could be as soon as next year. So hopefully by the end of the year, we're lower than we are now. It probably won't be by a ton, meaning maybe we'll be lower sevens, maybe even into the higher sixes, maybe even in the mid sixes. But the commentary was kind of pointing that we could see things into the fives, maybe even touching into the fours next year. So good news is on the way. Obviously, inventory is still an issue, so that's more of your expertise. The things that we're talking about on our calls that kind of had to do with that were twofold. One is looking at days in the market and asking for concessions where you can get them to continue to buy the rates down and use 2-1 buy down options. Home values are still lifted to all-time highs. Case-Shiller had it as high as 5% appreciation so far this year. FHFA, which is basically all of the conforming loan limits, so homes that have loans less than 726, 250, not in the jumbo, get rid of all the bank statement stuff. That those properties are sitting at about 7% appreciation based on the data, which is great. So we can go over cost of waiting. I think that's kind of been played out, and maybe your clients are tired of hearing it, and there's probably some conjecture regarding what's the term I'm looking for, a hangover from these rates, that people are kind of just sitting and waiting. But the reality is properties are going to get more expensive. I had that conversation with a buyer yesterday that happened to be a good friend of mine. And I said, look, it doesn't matter that you're my friend. I'm not trying to talk you into this, but if you're looking to buy, it's better to do it now, because when rates do come down, the likelihood is that properties are going to be more expensive. So there was, like I said, a call today. Friday we have PCE numbers, so we're not expecting anything but good news. We don't know that there's going to be much market movement based on that data, but all the commentary from the Fed meeting today was solid, so that's great. In regards to just general, positivity, if you will, continue to work. I think the overlying thing that we're pushing, and I'm sure it relates to you guys, do the things that make you successful. Stay in front of people as much as you can. We're doing a really good job. I can tell you, any of the leads that you've sent us, we're talking to them every single week. Sometimes it's just conversations as far as building rapport and keeping them online. But we're talking about rates, we're talking about markets, so we're trying to help sell on that side. And so anyone you send us, obviously we greatly appreciate it, but really just wanted you to know that we are not just sitting on our hands. We're actually talking to all of your leads every single week and keeping them updated. So beyond that, not a whole lot to talk about. We do have a new program that came out through one of our investors, PennyMac. We have some exclusivity to that. It's not a huge mover, but it's some positive news. Basically, it's a DPA program that we can run in tandem with other DPA programs, and depending on how much money they make, they can get some extra concessions. to help bite on the rate, pay for their closing costs, and obviously the mortgage insurance on those are fairly cheap. So if you are kind of looking in that, I should go back to one other thing. You know, I think the message right now is be omnivorous. You know, don't just fish in one pond. I would say if I were in real estate right now, I would probably be reaching out to FSBOs. All the things that you know when you first started were probably staples, you know, in order to find some deal somewhere. FSBOs, expired listings, have a point of contact, have a definitive reason why you're calling them. I've got some tools regarding that too. If you're interested, just reach out to me. Other than that, I hope you guys are all doing great and just wanted to get a message out to you and stay in front of you and tell you that we appreciate you. Thank you so much. Have a great rest of the week and try to stay cool.